Hi all, welcome to Taupo Real Estate's second market report webinars. We are coming to you live from Taupo, New Zealand, located on the shores of Great Lake Taupo, the biggest lake in the southern hemisphere. In attendance today is one of my global mentors, Evan Belfort, developer extraordinaire and a man that knows no bounds when it comes to adding value and taking massive action on a daily basis. Say hi, Evan.
Hi guys.
Anyway, we're excited to bring you this webinar, which is designed to put our valued customers and clients in a position to make informed, calculated decisions with their real estate requirements. To the present market, the key fundamental drivers underpinning the market are the housing shortage and net migration. Basically, the supply is not growing fast enough to meet current demand in the housing sector. There's been a tightening up with developers, with finance companies scrutinising development company activities, especially with the blue chip debacle, where good, decent, hard-working Kiwis lost their investments and potential retirement funds. This led to tighter requirements with equity lending across the board, tightening up. Obviously, we can think of other variables that have had an impact on housing supply in New Zealand historically. As per the REINZ statistics, there is a chronic lack of supply, which is fueling growth in house prices and lower sales volumes, impacting not just Auckland, but all of the regions, with the Waikato district, which encompasses Taupo, now sitting with a median sale price of $417,000. Median days on market nationwide is now sitting at 32 days approximately. Another noticeable feature in Taupo is the listing shortage, which up to a few years ago was normally sitting anywhere between 1,100 to 1,200 stock units, but is now sitting at approximately 530 houses on the market. This is as per the Trade Me side. Sales volumes over the last 8 months are up 40% approximately compared to the last period, and the median sale price, which is up 8.7% since last year. In February, it is interesting to note that 101 homes sold, with figures like this not being seen since 2003. This is solid evidence that the trickle-down effect has impacted the regions, especially Tauranga, Hamilton and Rotorua, and now Taupo. The two-speed market of 2 years ago is closing the gap between Auckland and the rest of the country. Heightened investor market in the housing market has become a major concern, not only for the Reserve Bank, but for other financial institutions. The common feature being the high levels of house price appreciation and the impact this could have on our economy and housing affordability. The question is whether the measures that the Reserve Bank and the government have taken in curbing escalating property market activity have gone far enough. For example, the introduction of the Bright Line test and the higher LVR rules, for example, the 30% deposit required on investment properties in the Auckland region. Initially, when these measures were introduced, Auckland house prices fell sharply over this period between November 2015 and February 2016. There was a noticeable decline of approximately 19%. This, coupled with a drop in offshore demand due to global financial market volatility and rigorous enforcement of capital controls, for example, Chinese authorities, which put a further strain throughout that period. A positive spin-off, though, with this is with the higher LVR rules and restrictions have been the trickle-down effect, with real estate activity escalating in the regions. Taupo Real Estate, and no doubt other real estate firms in the area, have noticed an increase in Auckland buyer activity in the regions, with a great percentage of buyers snapping up property and then For example, Taupo Real Estate, our property management arm, now taking care of the rental aspect of those investment properties. This has been fantastic in terms of synergies between our multiple businesses. So how does this all affect the Taupo market, you may ask? Firstly, I predict house prices to incrementally increase over the next 12 months in line with stock level shortages and increased investor speculation in the region. Secondly, I predict a continued buoyant rental market, especially with government and do-gooder lobby groups putting pressure on landlords in terms of their obligations. Hopefully this doesn't have a negative impact with landlords exiting the market and exasperating the already woefully low rental stock of New Zealand. Therefore, I would advise potential buyers to act quickly before increased competition from investors drive prices up, with the negative fallout being normal New Zealanders being priced out of the market. Look, if you wish to find out more about what Taupo Real Estate can do for you in terms of your real estate requirements, whether residential, commercial, rural lifestyle and or property management, go to our website www.tauporealestate.net or call me, Edward Hay, CEO of Taupo Real Estate. My mobile number is 027 238 3327, or Gloria McLaughlin, our principal and licensee. Her mobile number is 0274 824 388. And look, I'd just like to thank you so much for attending the webinar this evening. It's just fantastic to be able to add value to all our valuable clients. Keep posted, we're going to have more of these coming your way, and just to put you in, as I say, in an informed position to make informed, calculated decisions. And lastly, just remember our motto at Taupo Real Estate: get listed, get seen, get sold. Thank you so much for your time and have a lovely evening. Thank you. Bye-bye.